This presentation is about International Paper Incorporated by Nikki Brinkerhoff, Danielle Carlisle, Brad Kendall, Stacy Murphy, and Harini Patel. As a brief overview, we are going to discuss the company overview, firm performance, a SWOT analysis, corporate strategies, global business strategy, and a conclusion. My name is Harini Patel, and I'll be starting us off. So to provide a brief history of International Paper. International Paper was the result of a merger of 17 pulp and paper mills on January 31st, 1898. These mills ranged from production of 11 tons to approximately 150 tons. During this time, International Paper was the nation's largest producer of newsprint sold in the U.S., as well as exported products to Argentina, England, and Australia. A major milestone during this time period was that International Paper had the first laboratory in American pulp and the paper industry. Between the 1940s and 1960s, International Paper performed a large-scale reorganization that recapitalized the company and simplified its corporate structure. International Paper converted some of its manufacturing to military items such as the V1 box ultra-strength container, which essentially replaced wooden crates. Overall, during this time period, the company really began to grow and expand and help other services. Between 1960 and 1980, International Paper expanded to overseas into countries such as Italy and Spain, among others. This improved International Paper's presence in the European market. In the late 60s, International Paper entered a critical period in which numerous mergers and acquisitions were taking place. To avoid this hostile takeover, the company acquired specialty businesses, including entering into real estate and manufacturing of medical products. This was a time that was very difficult for International Paper via hardships, but it prevailed. From 1980 onwards, International Paper provided another large-scale overhaul and expansion. One of its major milestones was the acquisition of Hammer Mill. Hammer Mill had unprecedented and a high name in the paper industry, and essentially this really helped International Paper marketing and quadrupled its finances and profits. During this time period, International Paper also expanded into the Pacific Rim, where it established majority of its shareholders. In the early 90s, it changed its philosophy to a customer-focused and low-cost production type of company, which really focused on innovation via technology and just helping the corporate culture grow. Most recently, International Paper acquired Holman Paper in Madrid and is planning to convert its paper mills into recycled container board production mills. International Paper states that its vision is to be one of the most respected and successful companies in the world. Its mission is to do its part to improve the world today and for future generations to come by using renewable resources to make products people depend on every day. International Paper has come a long way over the last 100 years. It began by running as basically a typical mill that was ran by skilled workers who knew about pulp production, paper mills, product quality, so basically kind of like niche workers. However, International Paper has made its way to call its new culture the IP Way. In this organization, the IP Way deals with like a higher performance organization model, and it allows a greater degree of decision making to be delegated throughout the organization. The IP Way also promotes teamwork because it believes that if its employees can share their experiences and ideas, it can help the company see different perspectives and continue to be the best. Also, as far as diversity and inclusion goes, the company like really promotes this idea and has a lot of leadership training, reaches out to its students and students who are in college to try to help them make their way into the International Paper Company, and really provides opportunity for them to grow as students and as skilled workers in a higher performance organization model.
Hi, this is Brad Kendall, and I am here to discuss the firm performance for International Paper. When discussing firm performance, we are going to look at financial ratio analysis primarily, looking at things such as their liquidity ratios, asset management ratios, financial leverage ratios, profitability, and market-based ratios. We'll also take a look at their projected growth in the coming years. It should be noted that all of the information for International Paper was taken from their most recent 10K in December 2015. Also, the industry data was obtained through Guru Focus, and I used my Scottrade account to look up some other industry data that Guru Focus did not have. First, we have liquidity. Liquidity is used in determining the firm's ability to pay their short-term debt obligations. This means within the year, does International Paper have enough money to cover their bills? We have the current ratio of 1.65, whereas the industry is a little bit better at 2.3 times. That means that for 1.65, that means International Paper can pay their bills 1.65 times. However, whenever we look at that, we want to use the quick ratio, though. It's a little more accurate because inventory is included in the current ratio, and oftentimes that is not as liquid as some other current assets. So we use the quick ratio to use things that can really transfer into cash. And if you see there, it goes down because we take our inventory out to 1.08 times. If you look over time, the quick ratio has steadily declined. That means over the past 10 years, International Paper does not have as many assets as they had in the past to cover their bills. Next, we have asset management ratios. These are ratios that we use to determine the firm's ability to pay or to efficiently allocate their resources. Their inventory turnover is 1.63 times versus the industry 1.33 times, so they're more efficient in turning over their inventory. Their total asset turnover of 0.73 times versus the industry of 0.96 times. So they're not turning over as much as the industry is. and their return on assets is 2.7 versus the industry of 2.18. So they are better. They do get a better return on their assets than the industry. If you look down here, we have a few charts that show the trends that these are going. If you notice, International Paper's inventory trend is declining. Their asset turnover is slightly declining. However, their return on assets is increasing slightly. So it's concerning that their inventory turnover is declining consistently, as well as their asset turnover, but management is able to continuously get a growing return on their assets. Next, we have financial leverage. It really is this is important for creditors and analysts looking to see how much debt the company has, and thus how much risk they really have. International Paper has a debt ratio of 0.87. That means that 87% of their assets are financed through debt. And this is probably going to keep growing because the company has basically pledged to buy back a ton of shares. I think they still have $900 million that they can buy back, $900 million worth of shares that they can buy back. So the debt ratio will likely continue to increase. Their debt to equity rating is also at 2.4 versus the industry 0.7. And their bond rating is Baa2. The Baa2 is basically pretty low for investment grade companies. Their investment grade debts, it is right on the edge of being junk, to be honest. It's their debt is significantly higher, and I would assume that mixed with the growth in the paper industry is kind of a risky proposition. If you look here, you can see their debt to equity ratio is just, as they incur more debt and pay back or buy back stocks, this ratio is just increasing. You're increasing the numerator while decreasing the denominator. So that has that effect. The profitability ratios, there's a lot here. Their gross margin is better than the industry. They're at 30.79% versus the industry of 20.45%. Their net profit margin of 3.58% is better than the industry at 1.05%. Their ROI is less than the industry, which is typical because it's due to the heavy debt load that the company has. Whenever you see heavy debt burdens relative to the industry, you'll likely see lower ROI. This is relative to the ROE as well, so you got to think just because their ROE is really high doesn't mean their ROI is going to be really high, because the debt burden. Still much better than the industry. Market metrics, just a couple of things I used here to determine, just looking at performance, is the PE ratio, listed there as the price earnings ratio of 18.7 versus the industry of 33.3. Generally, it's thought that a higher PE ratio is from lower risk companies, which kind of would make sense here. However, you see over here that the PE ratio for IP is actually trending upwards over the last several years. And their price to book is 31.2 versus the industry of 2.4. And this price to book is really high because they have such a high ROE. Let's Next, we're going to look at the projected growth of the company. If you see the 5-year projected sales growth is at negative 2.34% versus the industry is actually growing 2.36%. And their 5-year projected dividend growth is at 32.6% versus the industry at 21.9%. You see here that their earnings per share is trending upwards slightly, and this is going to continue because the management is basically vowed to continue to do this. The reasons for the growth and the lack of sales growth is more because IP is trying to restructure through divestments and mergers to transform itself into a core packaging company. This is because paper is, as the world becomes more digital, IP has to find a way to stay relevant and continue to grow. And by getting into the core packaging industry and focusing solely there, then they won't be so exposed to other risky business models. Their management is focusing on maintaining the high margin industrial packing business, and they, as I stated earlier, are continuously repurchasing shares and increasing dividend payouts. This is to keep investors happy through these tumultuous times. Thank you.
I'm Stacy Murphy, and it's time to talk about the SWOT analysis. We know that International Paper is known for their printing paper, but did you know that they provide so much more? They are the world's largest pulp and paper maker and the world's premier manufacturer of containerboard and corrugating packaging. IP has been in business successfully since 1898 and has gained an enormous amount of notoriety operating in North America, Europe, Latin America, Asia, Africa, the Middle East, and Russia. Institutional Investors magazine has named them the All American Executive Team in 2016. Ethisphere Institute gave them the title of the world's most ethical companies in 2016, and Fortune's magazine has called them the world's most admired companies in 2016. International Paper manufactures a diversity of products through three segments: the industrial packaging segment, which generates 65% of the total revenue, the printing papers and pulp segment, which generates 22% of the total revenue, and the consumer packaging segment, which generates 13% of the total revenue. The industrial packaging segment manufactures container boards, including linear board, medium, white top, recycled linear board, recycled medium, and saturating kraft. The printing papers and pulp segment produces printing and writing papers for brochures, pamphlets, greeting cards, books, annual reports, envelopes, tablets, business forms, and file folders. The pulp is produced for manufacturing printing, writing, and specialty paper, as well as towels and tissue, filtration products, diapers, and sanitary napkins. The consumer packaging segment offers coated paper boards for food, cosmetics, pharmaceuticals, and tobacco products. They also produce cups, lids, food containers, and plates. International Paper is an equal opportunity employer that has over 65,000 employees around the world. This company can take you anywhere around the globe. Because the company is so large, they offer many career tracks with infinite possibilities in the area of manufacturing, supply chain, information technology, and finance. International Paper valuation levels and notable return on equity are above normal. They have seen a strong free cash flow in the last 5 years, which was able to fund an increase in their annual dividend for the last 4 years. Ending in 2015, International Paper's total revenue consists of 22.36 billion, In 2004, net earnings consisted of 555 million, and in 2015, 938 million. Their strategy allowed them to achieve return on invested capital of 11%, well above their cost of capital. Although International Paper has many strengths, they still have some weaknesses that impact the company in a tremendous way. International Paper has received a lot of bad press as it results to pollution and deforestation. Skeptics believe the company has even contributed to the change of the climate. International Paper has an enormous amount of debt. They have a total of 7.7 billion in acquisition related debt. Another weakness includes the North American printing papers business, which has declined. As a result, sales volumes have dropped down, there has been a decline in operating performance, and planned maintenance downtime costs has decreased. Although International Paper may think they are where they need to be because they are the company to beat in this industry, there is always a need for improvement and opportunities available that have not been explored. Improvements can be made to enhance the results of the Brazilian industrial packaging business. Improvements and a more aggressive approach can be incorporated for the rising need of fiber based food packaging. Taking the next step to grow IP will consist of expansions. International Paper could heighten the benefits of continued margin expansion. They could also meet the worldwide growth demand by converting the coated paperboard mill to fluff pulp production. Expanding the sustainable and renewable products business by increasing manufacturing for food containers and paper cups would also be a plus. International Paper has a great chance to make the North American industrial packaging business grow and function effectively and efficiently by investing millions of dollars for improvement. The optimization could improve the counterboard mill system, enhance the quality of their products, and reduce manufacturing and delivery costs. This could also result in an increase in the internal rate of return. Threats to International Paper deals with present and future risks that could pose a major problem. International Paper's competitors could definitely pose a threat. Their competitors are not too far behind when it comes to the market cap and the net income. Because IP is operating in a competitive environment, it wouldn't be a good idea for them to sleep on companies such as Amore, Ball Corp, Seal Air Corp, or West Rock Company. I'm sure they're all thinking of ways to make it to that number one spot. Product innovations, manufacturing and operating efficiencies, and marketing and pricing strategies from these top companies could definitely impact International Paper. Technology also creates threat. Important information about the company, customer, or employees could become subject to a cyber attack. Also, because more people are using cell phones, tablets, computers, iPads, and etc., people could eventually do away with using paper altogether. The economy can cause a threat through industrial production, consumer spending, and through the amount of money it takes for advertisement nationally and internationally. International changes could affect the overall business through fluctuation in the value of currency, political instability, and social change. A change in environment laws and legal proceedings regarding employees, consumers, and any costs related to a proceeding could pose a threat to the financial statement. A significant change in the measure of the Earth's climatic conditions caused by natural factors such as changes in the sun's intensity and ocean circulation and human activities could pose a threat to international paper in the future. Because international paper has been in business for over 100 years, consumers see them as being trustworthy and reliable. They have been classified as a Fortune 500 company. They operate in many countries and cultures around the globe. This global industry leader can't be easily replicated. They offer quality products and services with the best value to satisfy their customers' needs. Their state of the art technology gives them the competitive advantage and edge they need to stay ahead. They have a stern focus on wildlife management as it regards to the forest lands. This proves that they are motivated to create an awareness for their consumers regarding sustainability in hopes of impacting the environment. International Paper has a lot of strengths. They are the top company in their business. It seems as if their strengths outweigh their weaknesses. However, I would recommend that IP find ways to reduce their debt. They have a tremendous amount. They need an innovation team to come up with some type of programs or products that will be geared towards eradicating this debt completely. For example, they could possibly buy up more forest space globally and resell the wood to other paper companies at a higher price. This would also generate free cash flow.
Hi, I'm Danielle Carlisle, and I'll be presenting Global Business Strategies. Product differentiation. International Paper offers a wide variety of products which each contain their own target markets. These product types include coated paperboard, containerboard, corrugated packaging, cups, lids, and food containers, papers, pulp, and recycling. Although the paper industry can appear somewhat homogeneous, International Paper has successfully found ways to differentiate its products within its target markets. One important way it seeks to differentiate its products is through the product variety or mix that is offered. By offering a wide variety of products within each segment, it allows International Paper to be a one-stop shop for all products needed. For example, it offers a wide variety of different food containers and hot and cold beverage cups, making it possible to become a single source for restaurants and fast food chains. Another important area for product differentiation is through its product features. International Paper is well known for offering high quality and reliable products. Additionally, due to changes in consumer attitudes, the demand for eco-friendly products has increased. International Paper offers various products made from recycled materials and green technologies. The company also designs its products to meet the needs of the consumers. In just one example, International Paper offers hold and go insulated paper hot cups utilizing its own patented ThermoShield technology to keep beverages warm while your hands stay cool. This double wrap cup eliminates the need for double cupping and the use of a sleeve for hot beverages. Lastly, customization features allow customers to purchase International Paper's products and have their own company logo or phrase printed onto them. Cost leadership. International Paper currently operates in a commodities industry with very low margins. This means that economies of scale are key to the company sustaining long-term profitability. For International Paper, economies of scale allow the company to produce high volumes of paper and packaging products at a lower per unit cost. International Paper is able to do this due to its large global footprint, including 30 pulp, paper, and packaging mills, 236 converting and packaging plants, 18 recycling plants, and 3 bag facilities. The learning curve is another source of cost advantage for International Paper. The company has been operating in the industry since 1898 and also owns patents, copyrights, trademarks, trade secrets, and other intellectual property rights. Over time, International Paper has been able to develop and maintain knowledge that allows them to produce paper products more efficiently over time, ultimately reducing costs. Another important area of cost advantage is from reduced costs of factors of production. The cost of factors of production are especially important for International Paper due to its high volume, low margin business. Some key factors of production for International Paper include freight costs, costs and access to raw materials, labor costs, energy prices, cost of chemicals, and manufacturing conversion costs. One important way International Paper has aimed to reduce input costs has been through acquisitions, divestments, and joint ventures. This has allowed the company to not only increase its global footprint and economies of scale, but also to adjust its sourcing and logistics strategies when diseconomies of scale begin to occur due to either increased costs in freight or in labor. Another important factor of production is the cost and access to raw materials, specifically wood and recycled fiber. Currently, International Paper owns and manages 336,000 acres of forest land in Brazil and has harvesting rights on government-owned land in Russia. This advantage allows the company to maintain a steady source of supply and to acquire the materials at a reduced price. Although the company has recently divested in much of the forest land that it owned, due to the company's strong purchasing power, it can make competitive deals with other private sources as well. Another way the company aims to mitigate risks and reduce costs, particularly in the cost of energy, is through futures contracts. Being able to maintain a consistent price of energy can help International Paper mitigate risks from major fluctuations in market prices. Technological advances that are independent of scale can also help provide companies with a cost advantage. International Paper aimed to gain such an advantage when it implemented SAP across its global facilities, which was one of the largest SAP implementations in history. SAP is an advanced enterprise resource planning software that allows International Paper to streamline its processes and reduce unnecessary costs. Another key technological advancement is through the use of advanced machinery and manufacturing equipment. International Paper has designed equipment to increase efficiency and reduce the amount of manual labor required within its operations. Lastly, as International Paper moves more towards digital and advanced technologies, it requires new software and programmers to maintain its high level of productivity. These advanced software systems can be a source of cost advantage if the return on investment is substantial. Flexibility. In 2015, International Paper successfully completed the restructuring of the 2006 timber monetization to achieve its objectives of reducing risk and preserving financial flexibility, while maintaining the deferral of $1.4 billion of deferred income taxes. This restructuring allowed International Paper to free up additional capital to invest in other key areas of the business. The same is true for their other recent divestment in IP Sun joint venture in China, which generated $23 million in cash proceeds and removed $400 million of debt from the balance sheet. Another strategy International Paper imposes to increase flexibility is through the option to expand. The company often starts up manufacturing facilities in developing countries with the ability to expand operations in the future if they are profitable. Over time, International Paper began to expand its footprint in Brazil, where manufacturing costs were low and raw material supply was high. In their 2015 annual report, International Paper also announced a plan for fluff pulp expansion. Due to an increase in demand, International Paper will be converting a paperboard mill to fluff pulp production while also maintaining ongoing flexibility to shift between softwood and fluff production based on global demand.
Hi, I'm Nikki Brinkerhoff, and I'll be covering International Paper's corporate strategies. As a global leader in packaging and paper, IP has manufacturing operations in North America, Latin America, the EMEA region, as well as Asia. Their business includes industrial and consumer packaging, uncoated papers, market and fluff pulp. Headquartered in Memphis, Tennessee, they employ 58,000 people and are strategically located in more than 24 countries, serving customers worldwide. In 2015, their net sales were $22 billion. Their revenue is attributed to three divisions: industrial packaging, consumer packaging, and paper and pulp divisions. 65% of the 2015 revenue was from industrial packaging, 13% came from consumer packaging, and 22% from the paper and pulp division. The majority of international locations are wholly owned subsidiaries of International Paper. However, there is a joint venture with Liam Group in Russia that provides great enhancements to the coverage in both Europe and also Asia. This supported their decision to exit their relationship with Shandong Sun Holding Group in 2015. The Liam Group will provide products needed to cover this area of their world market. As discussed in the overview, IP has a strong corporate culture of conducting business in a respected and successful way. This is echoed in their corporate governance structure. They have a diverse board of directors that represent multiple different industries and multiple different parts of the world. The board committees at IP are tasked with overseeing the goal of achieving success by doing the right things for the right reasons. They uphold the highest ethical standards and are accountable in all IP does. These high ethical standards are also seen in their corporate social responsibility. As quoted from Mark Sutton, Chairman and CEO, "We do the right things in the right ways for the right reasons. This is the IP way." IP continuously works to improve their value chain, especially sourcing of wood fiber, water use, and energy efficiencies. In their sustainability report, issued annually, called In Our Nature, they discuss their progress in the 6 key areas they have targeted for their social, environmental, and economic performance. They include safety, water usage, greenhouse gas emissions, stewardship of the world's forests, ethical relationships with ethical suppliers, and giving back to their communities. As we look to the future for International Paper, there are some current headwinds that we will discuss. Lower prices in kraftline and corrugated products require IP to manage costs and become more efficient. In order to maintain key performance indicators that they are known for, like great return on equity, growth of their net income, and earnings per share return, they will need to identify solutions to make up for the lower prices. Our recommendations include exploring vertical expansion into other consumer consumables in the food service industry, and all efforts should be made to identify areas that can be modernized in their mills to help support the efficiency gains and reduce production costs.